Hello, superstars. Welcome back to LarryFx Academy, your number one spot for learning Forex the smart way. In today's lesson, we are diving deep into the most powerful strategies used in trading financial markets. Though we have different strategies used in trading financial market, but the most common and the most powerful one used in financial market is SMC, which is smart money concept. Though we have different strategies, right? We have ICT, which is inner circle trading, right? We have different one. But the most common one used in trading financial markets is smart money concept. So let's get into it. So in today's lesson, I'll be talking on what is smart money concept, what is SMC, how to trade SMC. All right, those are the things I'll be talking on in today's lesson. What is SMC? SMC is a trading strategy that allows the actions of large institutional traders like banks, hedge funds, and some corporations by identifying their footprint in the market. Right? That is definition of SMC. By what? Identifying the structure of the market, basically. That's what I mean by that. By following the footprint of what? Of the large institutional traders. Remember in my episode 1, I mentioned that 80 banks has 70 to 80% shares of all forex transactions that are trading currency pair. Banks has 70 to 80% shares of all forex transactions. So they are the one that moves the market. They are the one that control the market. They are the one that influence, move the market most. And they are the one that, let me say, they are the one that pump money into the financial market. All right, because they have the large share of the what? Of the financial market. And this, how can you identify the structure? How can you identify the footprint of these institutional traders? Now, in this SMC, there's something we call top-down analysis. Top-down analysis is the analysis you did or you perform using your what? Your checking there's something we call time frame for those of you that are just watching this. All right, there's something we call time frame. Time frame is the time taking for each candlestick we see here. All these candlestick, we call them candlestick. For each candlestick here to forms, right? We have different time frames, right? We have 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 45 minutes, 1 hour, 2 hours, 3 hours, 4 hours. But for you to know the structure of the market, for you to know who is in control of the market, right? There's something we call top-down analysis. And that top-down analysis, you have to do your analysis, check the structure of the market from what? From 1 hour time frame, right? To know who is in control of the market. Now, market cannot be in an using 1 hour now, market cannot be in an uptrend market in 1 hour and be in downtrend market in 2 hours. That means there's something wrong. All right. But if 1 hour, let's say this is 1 hour, right? This is 1 hour. I'll change it now. Okay. This is 1 hour time frame. On 1 hour time frame, we have an uptrend market, right? And how can you identify the structure of the market? How can you identify whether the market is uptrend or downtrend? Sorry, I used my trend line because I was trying to analyze this market before. Let me delete this. Let me also delete this. Now, how can I identify the structure of the market? You can understand the structure of the market by using your trend line. There's something we call trend line. This is my trend line. So you know, after you checking your 1 hour, sorry, you check your 1 hour, the market looks like what? A uptrend market here, right? Now let's check 2 hours. Let's do our let's check 2 hours. On 2 hours, sorry, on 2 hours, I think we have the same view, right? We have the same view on 2 hours too. Yes, we have the same view. And on 3 hours, what do we have? On 3 hours, they are the same, right? Now, on 4 hours, what do we have? Okay, we have what? I think we have the same, but the current candlestick on 4 hours showing that the what sellers are in fully control. Sellers are taking over from an up buyers now on 4 hours. But on 1 hour, on 3 hours, the current candlestick is what? Showing that the buyers are what? Sellers are fully control of this market. But the structure of the market is still an uptrend market. That is where SMC strategy come in. SMC will help you to know where the institutional traders are stepping in, where the institutional traders are taking their profit, where institutional traders are heading to in the market. Right? But now, the current structure, the current move of this market is what institutional traders are selling now. Because the candlestick is the candlestick of bearish candlestick is very, very strong, right? The bearish candlestick is very strong, right? Now let's check 2 hours. uh, 2 hours is still saying the same thing, right? But how do I know that the buyers are in control of this market? One, my trend line show that buyers are in control, but sellers are taking over from buyers, right? Now, here the market was down before, because of knowing this change of character. Change of character means when market wants to change from probably from uptrend to downtrend, from downtrend to uptrend. And now here we have double bottom. Double bottom simply means when you see a market touch a zone twice, right? We have double bottoms here. This is a double bottom pattern. We also have double tops. Double tops. Okay, this is an example of double tops. When market touch at your what at a resistance level, but double bottoms always occur at your support level. When you see a sharp pattern, when this is a sharp pattern, right? This is a sharp pattern. When you see a double bottom at your resistance, at your support level, show that the market is changing structure from uptrend, from downtrend to uptrend. But when you see a double tops at your resistance level, showing that the market is changing structure from uptrend to downtrend. That's for double tops. But for double bottom, always occur at your what? At your support level. So this is a support level where the double bottoms happens. Now, after the double bottoms, we have the higher highs and higher low. And whenever you see higher highs and higher low, showing that the market is what? Is an uptrend market, not downtrend. Because one, the chart formation gives us the confirmation of what? Bias. Right? The chart formation gives us the confirmation of bias. And after the formation of after the chart formation, we have the uh bullish movement, which is higher highs and higher low, right? Market mixes of higher highs and higher low. Remember, in my episode 3 of basic class, I made mention of whenever you see a market moving high, it's an up market, right? So now this market is moving high, making a series of higher highs and higher low. And I'm going to confirm this bullish movement, confirm this uptrend movement, another higher highs, higher low, higher highs. But after right, and you see a resistance zone. At that resistance zone, it's either you take your profit or you set what you call break even. Because market SMC always respect a resistance level. And don't buy at a resistance level. Whenever you see a market at a resistance level, avoid it. Don't buy it. Either you wait for breakout, break and retest, right? Or you ignore it, or you wait for the test. Now the market gets to this resistance level, this preferred resistance level, form a candlestick formation. This is a candlestick formation here. This is a candlestick formation. We call it shooting stars. And you can also call it gravestone. Alright. At this resistance level, see the candlestick formation to show that the market is changing, or probably the market wants to retest before a proper buy will start. Because the market has been making series of higher highs and higher low, showing that the buyers are what? Buyers are in control. But these current candles showing that the market is retested and we have the break of trend line. And mind you, whenever you see a break of trend line, it's either you wait or you identify the other blocks. I will talk about the other blocks, right? It's either you wait for it to break and retest before you buy. Let's say, let's say now this market is retesting now to this. You wait for it to retest back to this and see a candlestick chart pattern for a buy. So this is what I'm expecting on this chart, on this pair to do. Because the market are getting to what? Market gets to the resistance level, retest, break the what? Break the trend line of what? Of the uptrend. It broke the trend line, right? There's no retest yet, right? There's no retest yet. But I'm expecting it to be test before a proper buy. Because the structure of the market is what is an uptrend market here. Because that's already changed character because of this chart formation. Right? So that's how to identify the footprint of institutional traders, to know the structure, to know who is in control of the trend, to know whether the buyers are in control, to know whether the sellers are in control. But the current candlestick, the current move here is sell. Sellers are what? Sellers are the one in control of this market now, because there is no buy confirmation yet. All right. So that's how to identify the structure and to know and how use SMC strategy to make money in financial markets. I actually have uh four concepts I'm using. I use other blocks, I use fair value gaps, I use liquidity concept and structure. Break of structure. But in today's lesson, I want to take it one. I don't want to rush. I want to take it one after the other. All right. I want to take it one after the other. So let's take other block. What is other blocks? Other blocks. So if you are talking about other blocks are area or a point where institutional traders or big firms are trying to step in, take control of the market. They are trying to step in, or they are stepping in to take control of the market. That is order. The order is they are stepping in to move the market. And under these order blocks, we have two types of order blocks. We have the bullish order blocks and we have the bearish order blocks. We have the bullish order blocks, we have the bearish order blocks. So let me go to my chart again. Let me delete all this. Let me delete all this. So when we get to break of structure, I will talk more about how the market break or this support level and move. Now, if we are talking about bullish order block, I said we have two types of order blocks. The bullish order blocks, we have the bearish order blocks too. So if we are talking about the bullish order blocks, the bullish order block is the last bearish candle before the bullish candlestick. The last bearish candlestick before the bullish candlestick. What do I mean by that? This is how to identify the other blocks. Here, the reason why I marked this out before that, I said the market will retest. Retest at this zone and continue. Retest like this. Continue. Okay. Continue like this. It's because of these other blocks that we have here. Sorry. We have other blocks here. But I'm not sure yet that the market will respect these other blocks. And remember, when an other block fails, the other blocks turn to what? A breaker blocks. We have other blocks, we have the breaker blocks. Breaker block is when another block fails. So that other blocks now turns to what? Another breaker blocks. But there's a break of this, there's no break yet, because there's no break yet. There's no break yet. There's another block here that I saw that the market will likely to respect before what? Respect and retest before a proper buys. It's because of this other blocks here. Remember, the bullish other blocks is the what? The last bearish candle before the bullish candlestick. That is for bullish order block. Now for bearish order block, now let me show you another order block here that we have. We have different order blocks here. You can see after these other blocks, we have what? A strong buy. Let me delete this. See, after this other block, oh, our listeners, and I get it back. Yes. Sorry, I'll get it back. After this, after this other blocks, after this other block, the buy stepping, the other this particular the stepping and move the market up. Before we have another buy. And also we have another block here too. When we have again that we're not so here we have other blocks, the bullish other blocks here. This is the last the last bearish candle in between in between bullish candle. This one here. After this failed other block, the market move up, test and continue. Shake it now. That is for bullish other blocks. Now for bearish other blocks, is when you have like this, when market is, I will show you on my chart. Just trying to make the example here for better understanding. And we have sorry, we have this, we have this here, we have this. Now at this zone here, we have some confirmation. Now chart pattern, right? We have the chart pattern, and we also have other block at this level. Probably there's another block at this level. That's why the market moves down back. Alright. We have the change of character from uptrend to downtrend. We have double tops here. Alright. So after the double tops, the market moved down, retest. Probably here there's an order block to serve that the institutional traders are the other year. After that, we have the we say, and here also we have the fair value gap, but don't worry about that. It's one after the other. Now let me show you bearish order block. Bearish order block is the last bullish candlestick before before a bearish candle, a last bullish candlestick before a bearish candlestick. Okay, this is example of bullish order blocks. This is example of bullish order blocks. Now this is an example of bearish order blocks. This is it here. We have the last this is where the seller step in. This candlestick here. This green candlestick is the bearish order block. The last bullish candlestick before the what? Before the bearish candlestick is what? Is your bearish order blocks. And after the uh bearish bullish candlestick, you can see how the market moves down, right? Move down. And yet we have another formation of order blocks. This is it here. That order blocks. Move down this order block again. You can see this is the order block here. And this is the other block, which is bearish order blocks. Bearish order blocks. Bearish order blocks. Like I said, that you can use order blocks to make money using SMC strategies. Other blocks, fair value gap, they are under SMC strategy. They are under SMC strategy. Alright. Though I don't really know about ICT actually, but ICT they have their own pattern of trading also. I think they also use other blocks and fair value gap and liquidity. But then they add indicators to their charts, not like SMC traders. SMC traders, some SMC traders, they are naked traders. What do I mean by naked traders? Naked traders are the people or traders who don't add indicators. You can see how my chart is clean. If I say I should add indicators to my chart now, you see how this, let me add indicators. Let me add one polygon bounce to my chart now. Let me say I want to add let me add like Bollinger Bands. Okay, let's say we want to add. Okay, this is the Bollinger Bands. Sorry. Yeah. So this is indicator. Though some SMC traders add indicators to their chart too. But majority of SMC traders don't add indicators to their charts. Alright, majority. Let me say out of 100%, 30%, 70% of SMC traders don't use indicators. They are naked traders. Naked traders are those people that they don't add indicators to their charts. They trade nakedly. Alright, they trade nakedly. So now, let me delete all this. So let me also remove this. I will remove it later. So that is how SMC trader works. That's how to use SMC trader. SMC, that's how to make money using SMC strategy. Right. So in our next lesson, I will be talking on fair value gap, right? Liquidity. Make sure you don't miss the next video, the next lesson I'll be dropping. Make sure you turn on your notification bells and stay tuned for more of our powerful lessons. See you in the next lesson. Thanks for watching.